Hello everyone. Today I'll be sharing about two financial service companies listed on Bursa Malaysia, which is Ion Credit Service and Hong Leong Financial Group. The main purpose is to give some background on both companies before we go into their financial statement and risk in return analysis. Basically, Ion Credit is more focused on consumers financing, while Hong Leong Financial Group is a bigger, diversified financial group. For the analysis, we'll be looking for at ratios like liquidity, profitability, and leverage, and also their risk return performance. So, Ion Credit was set up in 1996 and listed in 2007. At first, it supported Ion Retail's businesses only, but now it's one of the main consumers finance provider in Malaysia. They have over 58 branches and more than 7,700 merchant outlets across the country. Their service include things like credit and prepaid cards, personal loan, Islamic financing, and also high purchase for items like vehicle or electronics. In recent years, Ion has gone digital. They launched Ion Wallet and even started Ion Bank in 2024, which is Malaysia's first Islamic digital bank. They also run Ion Insurance Brokers, offering both traditional and takaful products. Financially, they have been doing quite well too. In 2025, their revenue went up to 15% to 2.2 billion. Then next, now Hong Leong Financial Group is a much bigger play in compared to Encredit. It's a diversified financial conglomerate with three main divisions: banking through Hong Leong Bank, insurance through Hong Leong Assurance, and capital markets through Hong Leong Capital. It's one of the oldest and largest financial group in Malaysia, and they have been not just focusing locally but also expanding regionally. The group emphasizes innovation, entrepreneurship, and also corporate social responsibility, which helps strengthen its brand because of its diverse portfolio. This has more stability, growth opportunity compared to Ion Credit, which is more specialized. So overall, we can see Ion focusing on consumers financing and digital banking, while Hong Leong take on much wider range of financial service. So that's all from me.
Today I will be present the time series of analysis Eon Credit Service Berhad for 2023 and 2024. First, I will talk about liquidity ratio. Both the current ratio and quick ratio dropped in 2024. This shows that the company's ability to pay short-term debts has become weaker. But since the ratio are still above 1, Eon Credit can still meet its obligation. This means company is safe for now, but cash flow is tighter compared to last year. So second, I'll talk about activity ratio. There is no improvement in efficiency. The asset turnover and receivable turnover remain the same, and the collection period is more than 2000 days, which is very long. This means customers take a long time to pay back, and it can become risky for the company's cash in the future. Third is leverage ratio. The debt ratio increased slightly, showing that Eon Credit is using more borrowed money to finance its assets. At the same time, the times interest earned ratio decreased, which means the company has less ability to cover interest from its point. This shows the financial risks are higher. So the fourth one is profitability ratio. The gross profit margin improved, meaning the company controlled its cost of sales better. But other ratio like operating margin, net margin, return on assets, and return on equity at all fell. This shows that expenses and interest reduce the company's overall profits and shareholders receive lower returns. So for overall assessment, Eon Credit performance in 2024 is weaker than 2023. Liquidity is still safe but getting lower, efficiency is poor, debt is increasing, and profits are falling. If this problem continue, the company may face challenges in long term. Thank you.
So hi everyone, today I will be presenting the time series analysis of Hong Leong Financial Group Berhad focusing on 2023 to 2024. We will evaluate the company's performance using liquidity, activity, leverage, and profitability ratios, and then provide an overall conclusion. So these are the table of time series analysis of Hong Leong Financial Group Berhad 2023 to 2024. The first category is liquidity ratios, which measure the company's ability to meet its short-term obligations. From 2023 to 2024, the current ratio fell from 1.45 to 1.31, and the quick ratio decreased from 1.24 to 1.16. Although both ratios remain above 1, which means the company is still able to cover its short-term liabilities, the downward trend shows that liquidity has dropped slightly. This suggests tighter cash flow management in 2024. So next we look at activity ratios, which show how efficiently the company uses its assets and manage receivables. So the total asset turnover improved slightly, increasing from 0.033 to 0.035, meaning the company generated more revenue from its assets. However, the receivable turnover declined from 1.04 to 1.02, and the average collection period from 351 days to 358 days. So this indicates that the company is slower in collecting payments from customers, which may affect future liquidity. So moving on to leverage ratios, which measure the reliance on debt and the liability to cover interest obligations. So the debt ratio decreased slightly from 0.71 to 0.02, showing less dependence on debt financing. However, the times interest earned ratio dropped sharply from 1.32 to 1.14, which signals a weaker ability to cover interest expenses with operating profits. This creates higher financial risk for the company despite its lower debt reliance. Finally, we examine profitability ratios, which measures the company's efficiency in generating income. So the gross profit margin declined from 36.2% to 33.3%, while the operating margin fell slightly from 50.2% to 49.7%, and the net margin decreased from 27.6% to 27.1%.
Good morning, my name is Sumitra Anagidan. So today I will be presenting a comparison of financial performance of Aeon Credit Service Berhad and Hong Leong Financial Group Berhad. So firstly, this is the cross-section analysis table for Aeon Credit Service Berhad and Hong Leong Financial Group Berhad. So the analysis is based on liquidity, activity, leverage and profitability ratios. So let's look how its company performed in these areas. So the first one is liquidity. When it comes to liquidity, Aeon Credit is much stronger. So its current ratio of 3.62 and quick ratio of 3.47 show that the company has a significant buffer to cover short-term obligations. So in the other hand, Hong Leong has a current ratio of 1.31 and quick ratio of 1.61. So this means it can still meet its liabilities, but with less flexibility compared to Aeon. Overall, Aeon is clearly stronger in liquidity. So the second one is activity, which is efficiency. So let's compare the efficiency. So Aeon records a higher total assets turnover of 0.17, meaning it generates more revenue from its assets. So however, Hong Leong performs better in receivable management. Its receivable turnover is 1.02 with an average collection period of 358 days. So Aeon's receivable turnover is only 0.18 and its collection period is extremely long at 2028 days. So the difference comes from their business models. So Aeon focuses on long-term consumer loans, while Hong Leong deals with short-term banking products which are collected faster. So the third one is leverage. So looking at leverage, both companies are highly dependent on debt. So Aeon has a debt ratio of 0.76 while Hong Leong has 0.70. So the key difference is in their ability to pay interest. Aeon time interest, Aeon's time interest earned ratio is 2.37. So it's showing stronger resilience in covering interest expenses. So Hong Leong, however, has a much lower TIE of 1.14, which means it has higher financial risk. So despite Aeon having slightly more debt, it manages interest obligations better. So the last one is profitability. To compare the profitability, Aeon records higher margins across the board. So a gross profit margin of 36.20%, operating margin of 50.20%, and the net margin is 27.63%. So when it comes to Hong Leong is close behind with 33.30% and 49.70% and 27.20%. So in terms of returns, Hong Leong has slightly better return on assets at 0.95 compared to Aeon's 0.91, showing stronger asset utilization. So but Aeon has a higher return on equity of 3.2 versus Hong Leong is 3.1. So giving shareholders slightly better returns. So to complete this in the overall comparison and the conclusion, Aeon Credit has stronger liquidity, higher profitability, and better debt management. However, its weakness is in receivable collection due to long-term loans. So when it comes to Hong Leong, it's less liquid, but it collects receivable faster and uses its assets slightly more efficiently. So in conclusion, Aeon Credit appears financially more stable in the long term, while Hong Leong reflects the strengths of short-term banking model. So that's all from me. Thank you.
So my name is Ahmad Imran bin Abdul Halim. So today I'm going to talk about risk and return between two companies, which is Aeon Credit Service Berhad and Hong Leong Financial Group Berhad. So for the share price, Aeon Credit on 1 January 2024 is RM 5 ringgit 59 cent, and at the end of the year is 6 ringgit 26 cent, which is a gift of return of 13%. So for the Hong Leong, at the beginning of the year is 16.36 RM 16.36 to at the end of the year, which is RM 18.5. So giving the expected return of 13%. So for the mean of the return of each company is also same, which is around 0.005%. But the variance are differences because the fluctuation of price in each day are slightly different between both company, and also standard deviation also different, and the coefficient of variance also will different. So for Hong Leong and Aeon Credit have the same return, which is around 13%, because both company perform a similarity and also in the same industry. So we can see past trend of the finance and banking industry, the return are range around 10 to 15%. That's why we can see the return of the both company are same, because from the KLCI, from the Malaysian banking finance industry, also give the same range of return. So for the expected return, Hong Leong, both company has nearly identical ER, because as we know, is the return divide by the total daily, which is give a mean of the return. So for the variance, we can see the Hong Leong is better than Ion, because higher variance means the risky as a return deviate more from the average. So Aeon Credit has a higher variance because of the fluctuated of price that I mentioned earlier. That's why shows that standard deviation Aeon credit also are higher. Means Hong Leong is lower than the Aeon. Means Hong Leong has lower standard deviation, means less risky for a similar return. So we can see that from the fluctuation is quite obvious that the price comes every day, which is 5 to 10% price movement. Means the volatility of the Aeon credit are higher. That's why it's riskier. So the coefficient of variation, Hong Leong is also lower than Aeon credit. Which is Hong Leong is at 16.12 and Aeon credit is 23.21, which is give Hong Leong give more for each unit of risk taken, better for cautious investor. So that's all for me. That's all for me. So based on the risk and return, we can see that if the passive investor will choose Hong Leong, but if aggressive investor will choose Aeon Credit because of the volatility. So it means they can take opportunity of the price fluctuation to ensure their maximum profit. So that's all for me. Thank you very much.
So in conclusion, Aeon Credit show higher liquidity but faces declining profitability like ROE and net margin, and it making it riskier with higher volatility. And Hong Leong Financial, in other hand, has reduced their risk like lower variance, standard deviation, and coefficient of variance. It has a consistent profitability on 13.2% and higher operational efficiency. Because of its stability, Hong Leong is a safer option for investors, while Aeon could be more appealing to those looking for bigger returns at the expense of more risk. And moving forward, Hong Leong is well positioned to grow market share, while Aeon should more focus on improving profitability and risk management. Overall, Hong Leong balanced performance and lower risk make it the more reliable investment in the financial sector. So for the recommendation for Aeon Credit Service, the company should focus on improving its lower profitability by maximizing operational costs, enhancing source of income, and fixing inefficiencies in its financial management. Despite its current volatility, performance can be stabilized and investor confidence restored by strengthening risk and risk management procedure and liquidity planning. A recommendation for Hong Leong Financial: using its financial stability, the company might consider strategic regional expansion and diversify into emerging market segments to sustain long-term growth. And it will strengthen its market position and draw in more investors if it continue to focus innovation and operational excellence. So that's all from me. Thank you.